Is it too late to change your interest rate? You've applied for the mortgage, you've been accepted, and everything's good to go, but 2 months later, you're still in the application process and the rates have come down. What can you do? So first of all, let's put some meat on the bones. How does a mortgage application actually work? Now, it's going to be individualised, but let's summarise. You apply for a mortgage with a broker or you go straight to the bank. However you do it, you've applied for a mortgage, they've checked you out as an individual, they've checked the property out to make sure it's a good property to put a mortgage on, and you've been accepted, you've been given the mortgage offer. Great news, brilliant, we're halfway there. Next part is moving in. But sometimes there can be a bit of a time delay from when you get accepted and you get that mortgage offer to when you actually move in. Sometimes it's a couple of weeks, sometimes it's a couple of months. If that's the case, things economy-wise can change. And just like it is right now in 2024, the rate is up and down, and also it's coming down. So people who applied last year and got accepted in 2024, they're still stuck on that current high rate. What options do they have? Now, the good thing is, if the rates were to go up and you had that mortgage offer locked in, then you don't have to worry about it because you locked in that rate, the rates have gone up, you're happy, you're stuck on the 5% and you're not on the new 6%. But what happens when the rates come down and you're on that 5%? Simply answer your question, you can potentially change it to that better rate. And how do you do that? So when you go back to a lender or your mortgage broker to ask for that better rate or get them to check if there is a better rate to begin with, there's a few things you've got to take into consideration. Number one, has there been any changes in your financial background at all that could cause an issue by reapplying? All right, it's not going to be a full application, but they might check your background again. So we'll do a full check again, by the way, so please bear that in mind. But there might be a check, and if something crops up that wasn't there before, it could cause a complication, and that means that mortgage offer that you once had could be removed, and then you've opened up a different can of worms. We don't want that. Number two, there could be cost implications. Just because there's a lower rate now doesn't mean that's going to have the same terms as what your original rate and offer had. There might now be a fee applied to that product, so to gain access to that lower rate you might have to pay a product fee, and then in overall it might not actually work out cheaper. But if it does and your background hasn't changed, then a simple phone call to the lender telling them you would like to move onto the lower rate is all you really have to do. Now, another thing to consider when this happens is time. So when I talk about time, there's a few things I mean, but mainly what we're talking about is how much time have you got left till you move in, or until the remortgage, or whatever's going on in the background, how long have you got until you need to complete? Because if it's a few weeks, chances are you probably don't have enough time with the solicitors and the lenders and everything to change your product and get all the right paperwork through. You'd think you would, but well, speak to a solicitor and you'll soon find out how quick that can go. So you've got to do it within a timely manner. You can't do it the day, 2 days, 3 days before. All right. If you're just doing a remortgage and you're switching lender to lender, you're staying with the same lender, so you're doing what we call a product transfer, 14 days is normally fine because you're staying with the same lender, solicitors aren't involved, it's dead quick. But if it's not a remortgage and you're moving home or you're a first-time buyer, there's a lot of moving parts, and because of that, I would recommend no more than sort of doing this whole process 8 to 6 weeks before. Anything after 6 weeks, there's a risk that you're going to cause delays, and if you're going to cause delays, there might be financial implications, moving costs, solicitor costs, product fees like we spoke about earlier, and then it just might not be worth changing to that lower rate. It'd be more cost effective to actually stay at the original rate you applied for. Another thing to think about as well is if a lender that you're currently applying with still has that same old high rate from 2023 in this example, but it's a new lender that's offering a rate that's much lower. For instance, bank number one is 5%, that's who you've got the mortgage offer with, but bank number two is 3%, 3.5%. It's extreme, but just bear with me here. Bank number two, you might have to reapply fully. Now that's not just a simple phone call, that's a full mortgage application again. That's going through everything that we had to with the first lender. Now, in this circumstance, it's really, really recommended that you really weigh out the pros and cons in the situation, because first of all, it's going to take a lot longer than just a phone call. It's going to be a full application. That lender might not like you as a person as criteria, as in it might not fit your affordability, you might have credit issues, there might be a problem with a house on their side of things. Every lender comes with different rules, and if their rules don't fit you as an individual, another thing to consider is your current lender might not be offering a better rate. It might still be at that old rate in 2023 for this example. it might still be at the 5%, but lender 2 over here, they've got a new rate out on the market and it's around 4%, so it's a 1% saving. Extreme, but it's just an example. Number lender 2 might say, 4% what are you doing? Why don't you come over to us? Now that's a different ball game entirely. A quick phone call to the lender to change your product is completely different from moving lenders. And the reason why is every lender has a different set of rules for individuals. Your affordability might not match up, the house you're purchasing in might not like, your job role, how you get paid, are you self-employed, employed, you might have adverse credit, there might be something wrong with your credit file that the first lender was all clear with, but these aren't. These are all things to consider if you're going to move lenders. So it's very, very important that if you are considering moving from lender 1 to lender 2 before you move in to get that better rate, you really weigh up the pros and the cons, because if you don't and you try to make that switch and it doesn't happen, you don't want anything to adversely affect application 1, the first lender. So listen, at the end of the day, it's going to be about an individual circumstance and it's finding what's best for you. If you've used a mortgage broker, perfect, ring them, have the conversation. If it's been a few months and you've got a few months to go, see where you lie, because 9 times out of 10 when the rates are in a downfall, then to be fair, you're probably going to have a better product available. If you're getting to moving date and you still haven't spoken to them yet, well, don't expect a switch. Do it as soon as possible. Make sure you get things researched thoroughly as soon as you can, because the sooner you do it, the more chance you've got of being able to change your rate. Like I said, it might just be a quick phone call, but it might be a bit more than that. The quicker you have conversations with either your broker or the lender you've gone through, the quicker you're going to be able to get to that decision if you can have a better interest rate. I hope this helps. If it did, please like, subscribe, make sure to follow the content. We've always got things going on for mortgage advice. See you later.